Well, since the election, the stock market, it's really continued to climb. News broke when the Dow Jones Industrial Average topped $20,000 for the first time in history, and that was in January, and it's gone even higher in the weeks recently.
So what is going on with the stock market, and what does it mean for your retirement account? Omaha's retirement strategist, Darrell Bryant, is here to explain. He is one of the area's leading financial advisors.
Yes, he joins us every Monday morning to help us plan for retirement. Good morning, Darrell.
Hi, Darrell.
Good morning.
This is a good subject today.
It's
That's a pretty good subject.
Yeah.
Is it good news, though, for people, let's say, with, I guess, 401ks, IRAs?
Well, sure. You know, just this year, S&P, meaning large cap domestics, are up about 6.42, so that's good. We're getting good earnings reports now, where unemployment is whittled down nationally to 4.7, down from 4.8 last month. So, you know, good stuff. Construction jobs are up. You know, it's a good time to be an American.
Mm-hmm.
Right?
What do you say to people who are currently invested, maybe more on the conservative side of things? Because, you know, I mean, you're a fan of safety first, and a lot of people watching, I think in our part of the country anyway, they believe in being conservative, but they still want to take advantage of some of these record highs while they last. What do you say to them?
Well, first of all, we don't buy something to take advantage of the fact that it's moved up in value. Okay, so you still have to look at fundamentals. Just because, and that's a mistake a lot of typical investors that are just getting their feet wet have an issue with. Hey, they'll hear, hey, the market is moving forward, et cetera. So they'll say, well, I want a piece of that. Well, no, the market isn't necessarily moving forward. The market has moved forward. Okay, you're late. So be really careful with that. Here's some things to know. If you're a maybe not a really astute investor out there, if you are new to the game, number one, don't jump in now, especially if you're nearing retirement, just so that you can get your last hurrah and you don't have any experience with this, because it is markets are roller coasters. We know that. Okay, so here's what we know about markets, and this might help. Markets go up, markets go down, right? I mean, we know that. So understand that that's going to happen. We do know, however, that on a long-term hold. On a long-term hold, equities are going to be a great place to park your money, because on the long-term hold, they're going to outperform pretty much anything else that you could get, historically speaking, okay? But they're bumpy along the way, aren't they? So wouldn't it be prudent, if you're a new investor or young investor, to identify the dollars that you don't need for a while, and then perhaps you'd let those participate in these fluctuating values that will have historically a longer average rate of return. It's really not that difficult, okay? I don't know why investment guys and gals and the public doesn't see this, but we simply need to identify the dollars that we don't need for a while. Now, if you're a 45-year-old guy, probably all of your retirement stuff you don't need for a while. So you'd want to have that relatively aggressively invested if you can handle it psychologically. If you're not the type, if you can understand the statistics and you can rest easy with them, and you know that over time.
But don't stress yourself out every day watching things.
If it stresses you out, let's figure out another way. And when you are, I can tell you that at the point of retirement, you will be stressed. When people come into the office, they're a little stressed. They know they need to work out the SOCH and the pension settlements, and do we have enough, and how can we make it last, and what if the market declines, et cetera. Those are really, really important questions. So you need an income plan to put that together, which we talk about a lot. But markets are looking good currently, right? Have looked good. Trump has had a great effect, you know, on what's happened.
I wanted to ask you about that, because there was a change in the White House. How much does the president have to do with the economy in terms of, well, it's soaring or hitting a recession? How much does the president have to do with that?
Very little, although presidents will take credit for movements in the market. But if you look back at, we've talked about this recently, if you look back at Bill Clinton, the 90s, et cetera, well, he was a beneficiary of and he inherited an economy that included all of the technology.
The internet.
Okay, and so that was part of it, you know, so and Reaganomics, and then you have, you know, Obama. As soon as he took office, the market fell through the floor, and then it marched right back up. Very little does the president actually, it's just a few tenths, you know, historically speaking. But right now with Trump's promise of lower taxes, less regulation, freer money supply, right? The promise of infrastructure improvement, et cetera. All this is very encouraging. That's why you saw the market move forward. Now we're just waiting to get legs underneath that, which we're seeing because unemployment is falling to the floor, and that is almost directly correlated to the market's move. It almost always is. If unemployment is going up, okay, unemployment I'm sorry, if unemployment is going down, then you'll see stock prices move forward.
Sure, yeah, makes
The
sense.
market is high right now.
Yes.
Is there, I mean, that's great. Is there anything we should be doing then to maximize our investments even further?
Yeah. So number one, identify the dollars that you don't need for a while, and
Yeah.
only those dollars should be at risk. Furthermore, great question. Your two biggest expenses when you're getting ready to manage some money are fees. So if you look at your portfolio today, pull it out of the drawer and say, gee whiz, I don't see anything that says, hardly anything that says index.
Right.
Okay?
Yeah.
That's a quick way to reduce the fees. We'll show you how to do that. Just call the office. The other way is taxes. Fees are small potatoes compared with the taxes. So effective tax management within your portfolio is paramount. You want to avoid short-term capital gains. If we're going to have capital gains, make them be long-term. Take advantage of your Roth stuff, okay? So you have flexibility when you retire. There's a lot of things to talk about. It's not that hard to do.
Right, you just have to know
You just
what
have
you're
to
doing.
talk to somebody that
You're
knows how to
wondering,
throw this
do I have
together.
enough stocks? Do I have too many stocks? What's going to happen with the market next?
Yeah.
So if you're asking some of these same questions, if you want to sit down with Darrell and his team to make sure that you are on the right track for retirement, look at this. If you're nearing retirement or already retired and have $250,000 or more in retirement assets, he'll let you schedule a complimentary retirement consultation, and you can do it today.
That's awesome. And what's important to know is at Darrell's office, they book far in advance. You see him on the Morning Blend, you hear him on the radio, and a lot of people are anxious to get in and meet with him and his team. So this offer, it's only good for the first 5 callers, and the number is 402-932-2141. You can also head to BryantRetirementStrategies.com if Darrell's new to you and you want to learn more about his firm. Like, what's this guy's story? What do they do? The website's a great place to go.
All right, good information today, Darrell.
Thank
Thank you.
you.
Yeah, have a
Good to
great
see you.
cold
Be
week.
careful out there.
Yeah.
I know, but then like 70 this weekend.
It's going to be nice this
Rock
weekend,
on.
for sure.
Yes.
That's
Yeah,
nice.
enjoy your week. Guest of the morning.